Good morning, guys. Welcome to this Friday, August 1st, first day of August. So we wrapped up July, second month, and the third quarter is starting. And we're starting on a down note. They were signing new tariff regulation or setting tariffs left and right here yesterday and in the overnight. So I guess that's most of the reaction we're looking at. Could be a follow through from yesterday, too. We had a pretty good sell-off yesterday, so could be tariff related, could be related to end of the month profit taking, but we had a pretty good sell-off here right now going on, and we are excuse me, we are right there at that level where we potentially could see a change in capital flow. So in other words, if they take out this area of support, especially down here at the 6230s, well then I think we have a problem on our hands. Yeah, excuse my voice. I'm fighting off this freaking cold, you know. Yeah. How you get a cold in midsummer and last and grinding on you. It's like can't do much about it. Just had to go and grind through it. So that's where we start. Pretty good weakness in the overnight. Let's see how this whole day starts shaping up. But we are right down here. We run through the 6350s. We're down at this low volume at 6315 right now, flirting with the 6300s. So a key area of support for this whole thing to really start taking a turn to the downside. Now I remember this whole move, or most of the move, has been a pretty light volume trading to the upside, and we talked about it several times. Like you grind, grind, grind to the upside, and sometimes you just get that elevator to the downside. So it could be anyone's guess how big of a sell-off this is going to be. Tariff related, I think it's part of it. It's a lot of headlines on tariffs coming up this morning. Had they raising it on Canada, had they raising it on other countries, and so on and so forth. So August 1st was the tariff deadline, and it's come, and now let's see what happens. We do have a lot of big trade deals taken care of already, though, so we have some of the stuff handled. We're going to see a few more coming out there in short order, but yeah, this we're in for a little bit of volatility in August, I would think. So let's see how this shakes out. Now, looking at the news this morning, we got employment Friday, August 1st, Friday employment situation coming out at 8:30. And 9:45 get PMI manufacturing, and at 10 o'clock we get ISM manufacturing, construction spending, and consumer sentiment. Those are all numbers which can potentially move the market. So 8:30, 9:45, and 10, we're going to get some significant news and significant reaction. So I would be probably sitting on the sidelines until I let that news shake out and see what's going to happen, because we're probably going to be pretty choppy here, but until we figure out the direction. And if that direction is still to the downside, well, then stay on the short side. So I would start off, given that the reactions we're going to get are not massively directional, but more volatile. I'm going to start off from the short side of the market, looking to sell strength and see how far they can take it. Um, Early on, looking to get short against the well, 16 we are right there here. So against that single print at 25, against the 35s, 45s up to the 50s. 50s would be that volume edge we just took out. So we crossed that below volume area. We've taken out that volume at 63.50. So this area right here, this high, the London high, would be exactly a reverse retest of that level. So. And if they trade above that, I would be more optimistic that we may have a little recovery going, but I'm not going to count on that just yet. Going to let the market show me where they like it to go. So this is usually July, August, September, usually a seasonally weak time of year. Usually get some volatility going on, and now we have had a pretty freaking good July, and we've been grinding higher on light volume, and now we're getting into uh, August, and so far we're starting off with a little bit of weakness, and we have stuff driving it, tariffs. We had the Amazon and Apple earnings come out yesterday. Amazon is down $18 or something. Yeah, then to the downside. So I wasn't too happy. And Coinbase is down big as well. Apple haven't seen exactly where they are just yet, but so there's some pullbacks going on and some selling. We're coming off those fantastic Meta and Microsoft earnings. So Amazon not doing too well. And that's always going to be leaning on earnings, always going to be leaning on the market. So Between earnings, tariffs, and some significant news coming out today, we can probably expect a little bit of a choppy day. So, but if that chop is not directional, I'm going to stay on the short side of this until they take out that 63.50 edge. At which point I'm going to start thinking more range-bound trading, and if they can get up above that 6400s, I'll be back on the long side. But I'm not going to quite count on that one. I think we may see a little bit of profit taking, a little bit for more pylon. If we see a test of the lows here, chances are we're going to see a test of the 6230 here, these lower areas of support, maybe even down to the 6200. So we can certainly retrace pretty good. I mean, we retraced so far from the high at 6460 down to the 6260, and so almost 200 points to the downside in 2 sessions. That's pretty significant. So that's how we get started, looking to sell strength for rotations back and down. Buying weakness, not very aggressively right when the get-go. We are at a pretty good, this low volume area at 63.15 is a pretty good support area. So I could set up a long trade. We have the high volume area at 6300s. And after that, we have another little attractor at 6270, and then we're down here at that 6230s. So, and those are the levels to pay attention to. If they keep going lower, next attractor is going to be 6270. And the low volume area next, where we're going to find support, is going to be somewhere here between that single print at 6200 or 6215 up to that 6240. So that general area is where we're going to find pretty good support again. So if we can certainly be down here testing that lower 6200s in the today's trading. We will see. It's going to be an interesting day. But it is Friday, so after that you get to get a cocktail or sit back and kind of contemplate, right? So what I would do if it gets volatile and a little bit crazy, I'm probably gonna say stay on the sidelines, try to pick my spots, see if I find a good opportunity. Patience is the thing. And I trade a couple of different accounts and I have a more aggressive strategy on a different account, and that usually gets me caught. You get a little bit too aggressive on a you get a little bit too aggressive, and if you wait, get a little bit more patience, let the market come to you, you usually have a better opportunity. At least when you're wrong, you don't feel so bad about it. You know what I mean? Bonds and the Nasdaq. So bond market a little bit to the downside. It's still pretty much range bound though. So not much to say about it. They were trading higher here for the last few days. They were up against the 115s. Now they're backing back down again. So I would just start off range bound on the bonds. See where it goes. See where they end up here after all this news passes. But I would just start range bound on the bond market. Look to buy against 1314s, 1308s, 13s. They're going to sell strength, 1320s, 28s up to the 114s. So 3 levels up, 3 levels down, pretty straightforward. And then let's see if it's going to be directional or not. I think Nasdaq though is going to be the one to watch. Are we going to get to some retracement going on here, or are they going to just absolutely start knocking this down? So we have a cross current there with the good earnings from some companies, a little bit not as good on others. Now, just because they're down $18, they could have had a great earnings report. Maybe they didn't guide good enough, and then of course they get massively punished. So it is sometimes overdone. So I would not be watching the initial reaction too hard on these. It's the positive reactions are usually better. The negative reactions are usually something you just have to take with a grain of salt, because we see too many of those good news reports come out and they just punish the stock because it wasn't good enough. It's still in the bigger picture pretty darn good. So Nasdaq though, we're backing off pretty hard. So we're way up here against the 23,800s. We took out this whole area, retraced. We are right back here, reverse retesting 23,000 right now. And they bounced off that first time to it. But I would be starting off same story there from the short side to see how far they can take it. If they get up above, Nasdaq a little bit more. So if we can get up above this low volume area, 23,300s, and you see here they had this lower end of that distribution. This was where they probed yesterday, and here has been where they kind of reverse retested a few times in today's session. So this general area, this low volume area at the 23,300s, if they trade above that, I will be back on the long side again. At this point, I'm on the short side. Well, I would be back more range bound and to the long side. And at this point, I'm going to look to sell strength. So looking for shorts against the 130s, 200s, 240s up to the 270s, 280s for rotations back down. Maybe up to the 350s. We'll see. But if they start retracing hard and the London session comes out, I would be more inclined to go back range bound at that point. Not necessarily looking for a rally to the upside. I think between the news we have today, earnings, tariff news coming out, I think the market is going to be probably be a little bit volatile here. So now, if they had been more trade deals, not as much tariff reaction. If the earnings on Amazon and Apple would have been fantastic. I haven't seen Apple yet, so I shouldn't say anything about that guy, but with the reactions to it. I think the market would have been holding on a little bit better, but I think this rotation down is mostly more likely tariff-related stuff coming out and the market reacting to it. But by now, it should have figured out that the tariff is a big negotiating tool. It's keep changing, and it's just trying to trade off it is kind of a fool's errand. So, but anyway, so starting off from the short side, if this trade up about that London high to 280s, take off the short bias. On the way down, not going to be very aggressive at all. Uh, to see if it's truly start of a little bit bigger correction, then you don't want to be stepping in front of it. So I did that a couple of times yesterday, and that was it did not work. The whole day I was waiting for that little snapback rally. It never happened. They just never, and no one stepped in and started buying it, which is tells you that there may be more to come. So not going to be super aggressive on the long side at all. All right, the oil and gold. So this one is easy. Gold is just range bound. Holding pattern. We gapped up on the rollover. We gap closed the same day, and then we have been pretty much been going sideways around the 33.40. So starting off range bound trading on gold. Sell 33.55s up to the 65s. Look to buy weakness 33.36, 31 down to the 25s for rotations back up. So fairly tight range. And maybe include the 33.18 to 18.19 here in the buying. So below that 18, start considering a move to the downside. And if it starts trading above the 65, start considering a move to the upside. So that's kind of where we are on gold. Let's see if we're going to get some reaction to this. But we have a lot of news coming out this morning, so there could be reactions, could be directional reactions, could be all over the place. So given that the reactions are volatile but not directional, that's when we fall back on the analysis. If they are directional, you may have to reassess and start looking at trading in that direction. On oil, also pretty solid, not going anywhere. They did take a leg higher, and they haven't quite backed off, but they're reverse retesting this level right now. So they're reverse retesting the 68.50 to 69. And if they take it out, I think this whole thing goes back into a lower range. If it holds, they can certainly trade back up again, but not quite sure what the dynamic is there for demand and what's the only thing I can think of, as I've been saying, it feels counterintuitive that oil trades higher like this, but it could be short-term demand pressures causing it. So we'll just have to kind of wait and see on that one. I have not been aggressive trying to trade oil for a while now, kind of sitting on the sidelines. If I guess to get a good opportunity, maybe I'll step in, but I'm not going to be super aggressive on oil at this point either. So, but as long as that level holds, the 68.50, stay on the consider a slight bias to the long side, and see how far I can take it on the upside. So still looking to buy against the 69s and 68.50s for rotations back up. That's how we get started on oil. So we got oil slight bias to the upside. Gold is range bound. ES and Nasdaq, we're starting from the short side. Let's see where they can go from here. And on the ES, you had above that 63.50, take off the short bias. On the Nasdaq, that level is 23, I would say 23,300 or 340s. If you had the 280s, it's the London high. So between that one and the 340s on the Nasdaq. So those are the levels. So we got another 10 minutes before the employment situation kicks in. Time to go get some coffee, get ready, you know, get an aspirin or something. No cocktail just yet, but maybe later. All right, guys. So good trading, and I will see you back at 11:30 for the next update. So get ready for a little bit of a roller coaster here. All right, guys. Later.